What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about the vulnerability of big tech, not only from a technical standpoint, not only from a yields standpoint, because 10-year yields have been pushing higher, but this is something that we haven't covered on the channel in some time, and it's part of our macro analysis, and that is going to be the strength of the US dollar, which has been pushing higher. It's been doing really well. It has been appreciating against a lot of currencies. So I'm going to break down exactly why that's a problem. Yes, a stronger US dollar actually is a problem for big tech companies. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything is going to be included, as well as the members only private videos, intrinsic value spreadsheets, and there is a 16% annual discount available till the end of this month. So we've got 8 more days left if you want to take advantage of that as well. So link's going to be down below. So first of all, I wanted to go over this research paper that basically came out from Lombardo Research, talking about why the US dollar may be stronger for longer. Okay, we're going to talk about this, but inflation expectations, according to the Michigan surveys, have been coming down. In other words, the US consumers are expecting inflation to be lower on a 1-year and a 5-year basis. So you'll notice that it has come down from, well over 5% down to now 3.1 to as low as 2.7%. So inflation is expected to come down. Now, when we look at the US dollar, right, it's same as any other asset. I don't want you guys to confuse the US dollar with like something else. It's a currency. Yes, it's a currency, but it has the same dynamics at play. The reason why it gets stronger versus weaker if there is more demand versus less demand, right? Think of anything else. Think of a stock, right? If there's more demand, the price goes up, right? If there's more supply, less demand, the price goes down. Think of crypto, right? Bitcoin. Why does it go up? Because there's more demand, less supply, price goes up, and vice versa. If there's less demand, more supply, price goes down. Same exact thing with the US dollar. If there's more demand for US dollars globally, right, there is going to be a strength in the US dollar. It's going to appreciate over time. And that happens on the back of higher yields, higher rates, right? 10-year yield, if it's pushing higher, then there is going to be more demand for US dollars, because guess what? Yields are paying you more. So the US government debt is going to be paying you 4%, 5%, 6%. So the demand for dollar increases, and as a result, it strengthens the US dollar. So this right here is actually a quick example that I want to go over very, very quickly. But first things first, if you take a look at the 10-year yield and the US dollar, you'll notice that they are kind of moving in a very similar pattern with each other. Whenever we do see the 10-year yield, which is the orange line, you see that it pushes higher. We see the dollar index, which is DXY. DXY is a basket of all 6 currencies. Includes, I think, the Japanese yen, includes the euro, the pound. I believe it includes the INR. And every time the 10-year yield goes down, we see the dollar index also pull back. Every time it goes up, same thing. Over here, you can see that both of them go down. Or right now, you can see the 10-year yield is pushing higher, and the dollar index has seen a massive rally. This right here, the dollar index going down, the 10-year yield is also going down. So you can kind of see that they both move in tandem with each other. They move kind of, together. One of them kind of lags sometimes the other one, but for the most part, they do move in tandem with each other. So this right here is a report that was literally released a few days ago that I want to go over. And the key takeaway is that the strong, resilient economic growth, that's the main reason as to why the dollar has strengthened, because we've seen the yields go higher, and the yields have been going higher on the back of a couple different expectations that inflation is going to potentially come down, and not to mention the economic growth is going to be far stronger than previously expected, right? Even Federal Reserve in their Jerome Powell in their FOMC, they put down a new estimate for their GDP growth to 2.1% for this year and 1.5% for next year. And that was updated from their June estimates, right? So even they are expecting a stronger growth in the U.S. economy. So you can see the key takeaway is the U.S. economy has proven to be more resilient, fueling appetite for American financial assets, and the positive growth divergence and higher yields and offer in the U.S. are 2 key factors supporting the dollar. And this research paper, the author basically expects the U.S. currency to appreciate against the euro, taking the euro-USD exchange rate towards 1.04. And if the U.S. economy has surprised investors with its resilience, the dollar has also confounded early 2023 expectations that it would weaken along with U.S. growth as well as yields outpacing much of the rest of the world. We see the dollar's strength against other major currencies persisting at least for another 3 to 6 months is what they're talking about. And this actually came out in September, right? Literally just a few days ago. So they are expecting a stronger dollar over the next 3 to 6 months, which is going to do what? put more pressure on big tech, which I'll go over in just a minute. But this right here is the increase. It's gone from 99.6 to a little bit over 105.8. Now, a 6% move, you might think to yourself, that's not really a big move, but it is when you compare it to other currencies and how they have depreciated against the US dollar, right? So if you come over to, let's say, USD Euro, so that's going to be this number right here. It has appreciated, gone from 88 to over 93. That's over a 5.87% increase. USD INR, I'm not really sure if the dollar is appreciated against INR. Yep, so it's not really gone much, since July. It's only at 1.5%. In fact, I do believe that INR has a lot of potential. Indian rupees is actually going to, in my opinion, perform a little bit better compared to US dollar. But US dollar yen, let's just take a quick look on that as well. All right, what are we doing? Yen here. You know what? There is a foreign exchange watch list here for me, I believe. Commodities, currencies right there. There we go. Euro USD, Euro JPY. So, okay, this is pushed higher since July, a little bit over 7.7%. And then against the pound, it's actually gone down. No, this is British pound. So British pound against the US dollar. So it's the opposite. So you know what? Let me just do that. It's USD GPB. We're looking at this, and obviously it's rallied quite a bit from 76 to over 81. So 7.3%. So on average, it's gone up like 6.5% against currencies. It has not gone up against INR, which, like I said, has a lot of potential in my opinion, but that's for a different video. Now, going over to further what they have mentioned, of course, what has changed. The US's better than expected growth supported by higher wages and a strong labor market explains much of the bounce, while the likelihood of severe recession kept receding, right? So stronger economic growth, inflation potentially coming down, wages pushing higher, a very, very tight labor market with strong jobs reports is really the reasons as to why the US dollar has seen significant increase, in its potential move to the upside. Now, one more thing that I want to mention is that there has been a lot of capital inflows from international markets, especially in June. So they mentioned that, international capital flows in the US market rose by a net $148 billion in June after a net outflow in May of $162 billion. In contrast, foreign flows in European equities have been diminishing while European fixed income investors have begun seeking higher yields abroad. And that's the thing, right? When the 10-year yield is now sitting at 4.3% on a nominal basis compared to 2.7% against the German bond, and 3.2% for French government debt, obviously, which one's going to be more attractive, right? It's the 10-year yield on the treasuries, which is giving you a significant better return on a US dollar denominated, bond, right? So that's significantly better than the French, the German, the gilts over in the UK. So that's one of the reasons why there's a lot of demand for US dollar. Now, that's not great news for big tech. And that's the whole premise of this video, is because of big tech generating over half 58% to 60% of their revenues come from outside of the US. That's actually not good news because the US dollar is appreciating against the currencies where they do business 60% of the times. It's depreciating, right? So that's a bit of a problem. So tech stocks face new blow as strong dollar threatens earnings. This actually came out back in October that I wanted to go over. And you'll notice the large technology companies generate 58% of their revenues outside of the US. And the highest share of the S&P 500's 11 groups, according to FactSet. And that makes them particularly vulnerable to fallout from a surging dollar. When dollar strengthens, sales that companies earn in non-dollar currencies are worth less. And here's a simple example that I wanted to go over. And what you'll see is, let's just say that the US dollar INR rate is $1 to 82. Okay. I don't know what it is exactly right now. So let's just go over that very quickly. So USD INR is about 82.9, right? So let's just go ahead and put 82.9. Okay. So 82.9, let's just say that this is the rate. But over the next few weeks or next months, dollar strengthens and dollar appreciates, that persistently goes up. Let's say a dollar is now worth 86. Okay. Let's just say that it pushes higher to 86. And that's how currencies work. I know this is depreciation. This is actually currency depreciation. And if you have taken a foreign exchange class, it can be a little bit mind-boggling that when the price is going up, that's actually considered as depreciation. Yes, it is, against the dollar. So let's just say that it goes from 82.9 to 86. Now, let's just say that Apple generates revenues in India of almost 1 million rupees, right? That's about 10 lakhs, right? 10 lakhs rupees or 1 million rupees. This is going to be that number, right? Same number in both situations, but when they convert that back to US dollars, look what happens. In this example, we're basically converting that 1 million rupees divided by the exchange rate, which is 82.9, and we get to 12,062 US dollars. But when the INR depreciates against the US dollar, and the dollar strengthens and it appreciates, right? 86 is what we're working with. Look what that same 1 million rupees is worth back in US dollar once converted with the brand new rate. It's going to be 11,627. That's a 3.6% foreign exchange impact. Now imagine this happens over several different countries, several different exchange rates, and of course, different spreads, different depreciation rates. And again, the foreign exchange impact, it can be huge, right? And that is where the problem begins. Obviously, that's going to ripple into the earnings of these companies. Of course, these companies do hedge on a foreign exchange basis, but not as much, right? It's not as significant. So that's something to keep in mind. And again, a lot of people have been asking about the dollar index, what's going to be the outcome. Look, as long as the yields keep going higher, as we have seen the 10-year yield keep pushing higher, there is possibility that we continue to see this dollar strengthen here and push higher. Right now, it's already trading at a huge resistance at around 105, 106. So this right here, is exactly where we got rejected in the past back in March of this year. In the past, we've gone rejected here January of 23. This right here back in May of 23. And right now, we're just sitting at that level with the RSI and MACD also a little bit more on the overbought side. But, if we continue to see more potential upside here in the dollar with the yields also pushing up and we see stronger economic growth, then I do believe that 107.7 is possible on the US dollar. That's going to be an upside of close to, I believe, another 2%, and that's going to depreciate against other currencies, and that can put more threat, more vulnerability on big tech as well. So that's something to keep in mind. So hope you guys enjoyed this video. Just wanted to go over that. And right now, again, we're seeing a very nice move to the upside on the US dollar on the back of stronger yields, and the demand for dollar has been increasing. But the bottom line is, if we start to see some pullback in the treasury yields, it's possible the dollar comes down. But right now, it's going to put some impact, some potential concerns over big tech as well. So let me know in the comment section down below. What do you think? As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.